Hello everyone! Joy is back! Today, we've got some hot news from the stock market, packed and ready for you. I guarantee you'll be so engrossed you'll lose track of time. For today, we'll be discussing 4 very interesting topics. First, we'll start with Wells Fargo's analysis of the Fed's approach at the Jackson Hole meeting, followed by the fierce competition in the delivery business between Amazon and Walmart. Then we'll look at whether Target is about to face the same fate as Best Buy, and we'll wrap up by diving deep into the future of 2 tech giants, Amazon and Tesla, as they make a huge bet on AI. If you're ready, let's get into it. Joy Up Invest Podcast, invest better every day. Hello, dear listeners, and welcome to Wall Street Wake Up, the show that wraps up and updates you on what's been happening in the U.S. stock market and markets around the world over the past 24 hours. Let's kick things off with the big news from Wells Fargo's report on the upcoming Jackson Hole Symposium this month. For those who aren't familiar, this is the annual meeting of the U.S. Central Bank, which we simply call the Fed. It's a very important event because the Fed chairman, Jerome Powell, will talk about the economic outlook and future monetary policy. Analysts at Wells Fargo believe that at this event, Mr. Powell might revise the monetary policy framework, especially after the world has changed so much since COVID-19. Just think about it. Before, the economy was slow and inflation was low. But after the pandemic hit, inflation skyrocketed, far exceeding the Fed's 2% target, and the unemployment rate dropped to a multi-year low. Analysts think the Fed probably won't change its main policy tool, the Fed funds rate, which acts like the economy's accelerator. But what might change is its perspective on inflation and the labor market. While they used to worry about inflation being too low, now they have to prepare for high inflation, which could lead the Fed to use stricter measures in the future. This news shows us that the financial world never stands still. The Fed adjusting its policy framework is like a company having to review its strategy when the business environment changes. Understanding this helps us better prepare for market volatility and not be surprised when we see the Fed signal tighter policies. Moving on to the retail world, the war for same-day delivery in the US is getting incredibly hot. The main competitors right now are Walmart and Amazon, who are using every strategy they've got to fight it out. Analysts at Bernstein believe Walmart has the advantage with its massive size and large number of stores, making it easy to reach customers. But Amazon isn't backing down. They've lowered the free delivery threshold for Prime members to just $25. Meanwhile, new players like Instacart, DoorDash, and Uber Eats, who operate on a third-party or 3P model, act as a middleman connecting stores and customers. They focus on speed and a wide range of options. You can get items from any store you want. It sounds like everyone is in a race, doesn't it? But for investors, Bernstein sees all these companies as still being attractive because the online delivery market has so much room to grow. This fierce competition in the delivery business is a good sign for consumers because it will lead to better service at a more valuable price. From an investor's perspective, we don't just look at who wins. We look for which business has a structural advantage or a sustainable business model. For example, Walmart has its store network, and Amazon has a huge customer base and a growing advertising business. We can invest in strong companies and benefit from the growth trend of this business at the same time. Here's another retail story to watch. Target, which is currently facing a dead end similar to what Best Buy faced a decade ago. Back then, many people thought Best Buy was dying because of Amazon. Target's problems are similar to Best Buy's: declining sales, a weak online business, and customers who see their prices as higher than competitors. But Best Buy managed to turn the crisis around by renovating its stores, investing in employees, and making massive cost cuts. Analysts believe that if Target gets a new leader with a clear vision, it could also lead to a major change. But the key question is, should Target pour money into a supply chain system like Walmart did? If it doesn't have the scale to match, the investment might not be worth it, and online sales could continue to eat into its profits. We'll have to wait and see if Target can follow in Best Buy's footsteps and make a comeback. The story of Best Buy is a good lesson that no company dies easily if its leaders are brave enough to change and have a clear vision. As investors, we can learn from this story. If a company we own is facing a crisis, we should look at what management is doing to solve the problem and what strengths the company can use to recover. Sometimes, what seems like the worst time might be the best opportunity to invest in a company that is about to turn around. And finally, we close with the stories of two tech giants, Amazon and Tesla. Some analysts believe these two companies will surpass Apple in the future. Analysts think Amazon is no longer just an online retail company. It's a profitable growth company with two high-growth businesses that are generating excellent profits. The first is Amazon Web Services, or AWS, or the cloud computing business, which is the brain behind many websites and applications worldwide. AWS's growth is now fueled by the booming trend of artificial intelligence, or AI. The second is Amazon's advertising business, which is growing the fastest because customers who come to the platform are already intending to buy. This makes advertising here a surefire way to increase sales. Meanwhile, Tesla isn't just about the electric cars we know. It's making a huge bet on two ambitious projects. The first is Robotaxi, a driverless car service the company plans to build to increase profits and expand its business. And the other is the Optimus humanoid robot, designed to do household chores or repetitive tasks. Both of these projects are still in development, but if they succeed, they could transform Tesla from a simple car company into a company that generates revenue from services and advanced technology. This reinforces the fact that the world's leading companies don't stand still with their past successes. Both Amazon and Tesla are moving forward by using artificial intelligence, or AI, to create new business opportunities with massive growth potential. Even if these projects are just bets or moonshots with high risks, if they succeed, the company's value will skyrocket in ways we can't even imagine. For investors, this is our chance to invest in the future of technology that is about to change the world. How was that, everyone? I hope the news I brought you today is useful for everyone looking for investment opportunities. All the great information today comes from investing.com and interesting analysis articles from the Motley Fool. I want to thank these great sources that made this discussion possible. Now, let's take a look at the stock prices related to today's news. In this section, I'll be analyzing the stock prices live and updating them daily for our listeners. Let's start with Walmart, WMT. This chart looks the simplest. It's a curve that has been steadily rising, showing the stability of a business that has adapted very well. No matter how much the world changes, Walmart will always be a go-to for people's shopping needs. I think in the long run, Walmart remains an interesting stock. The support and resistance levels are support at $55 to $60 and resistance at $110 to $120. Next is Amazon. This chart looks a bit more volatile. It seems to be trying to go up all the time, but it also has some big swings. That's because Amazon's value isn't just from its online store. It has the massive money-making cloud business, AWS, behind it. That's the main driver and the company's true treasure. I think if this business stays strong, Amazon can go a lot further. Amazon's support and resistance levels are support at $200, $210, and resistance at $320, $330. Let's look at Best Buy, BBY, and Target, TGT. Both charts have a similar characteristic, a triangular shape that indicates volatility. Both companies have to try and adapt to the changing economy. If they can, there's a chance they can recover. For Best Buy, the support is at $60 to $65, and resistance is at $140. Target's chart looks a bit more stable than Best Buy's because it has strong support at the bottom. Looking at the chart, you can see that the current price is getting close to an important support level, which could be an interesting point for a reversal. For Target, the support is at $85 to $90 and resistance is at $270 to $280. For DoorDash, DASH, and Uber, UBER, which are platform businesses, their charts look very similar. If you look closely, you can see that the price is moving in a range that is gradually getting higher. This is a good sign, like a business that is steadily growing with the increasing trend of delivery and ride-hailing services. I think these two can go on for a long time, as long as people continue to use their services. Uber has support at about $65 to $70 and resistance at about $110 to $115. DoorDash has support at $160 to $170 and resistance at $280 to $300. Finally, we have Tesla, TSLA. Tesla's chart is as exciting as its business. The price is moving in a triangle pattern, which is a signal that it's about to make a big decision on whether to go up or down. But overall, Tesla isn't just a simple electric car company. It also involves clean energy and AI. I think the future still looks bright, but you have to be careful because the stock price is very volatile. The support will be at about $220, $240, and the resistance will be at about $400, $420. All of this is just my personal view. It's not investment advice. Please use your own judgment and do thorough research before making a decision, because all investments have risks. Before we say goodbye today, if you're a stock trader and you have questions but don't know who to ask, feel free to leave a comment and we can chat. See you next time. Bye-bye.